the firm I was looking to set up, I thought about what is it that they were trying to do and what I think fits in terms of visuals. And I saw Indy, sneak his way into the temple. He steals the golden idol. There are arrows flying and poison darts, and he escapes, jumps in the water, and climbs up onto a seaplane and takes off. It's like, wow. Should be nimble, should be going places other people aren't, should be a sense of adventure, and it should be fun. Yeah, I guess to go back in time, over the arc of my career, I got into investing before I could drive. I think I was 12 when I really started getting into it. I started my career in large caps in the US.
Hello, everyone. I have Joe Magyer over here, a close friend of mine and also one of the earliest investors at XENA. Joe has had a very interesting journey, unlike a lot of the VCs. He started his career in public markets and he slowly transitioned into private. He's worked with a lot of companies across the world. And I'm very glad that I met Joe through Techstars. And Joe and I have spent a lot of time discussing not just about XENA, but his viewpoints, which I find really fascinating. And I'm pretty sure a lot of people find fascinating as well. And so because of his journey and because of our association, I wanted to spend some time speaking with Joe and getting his thoughts on a few things, which I think would be quite fascinating. So thank you so much for taking the time, Joe.
Thank you for having us, sir. Looking forward to it.
Let me ask you a question I don't think anyone would have asked so far. Why is Seaplane Ventures? And, I've seen your logo as well. It is literally a seaplane. And plus, I'm pretty sure not a lot of people get the opportunity to start their own funds, which you have. Why did you decide on the name Seaplane?
Sure. When I was a kid, my parents rented Indiana Jones, the first one. And I was supposed to be in bed, but they put it on the old VHS, watched it in the living room, but I snuck out, hid behind the couch and watched it. And I saw Indy, sneak his way into the temple. He steals the golden idol. He takes off running. The huge boulder is rolling after him. He gets outside. There are arrows flying and poison darts. And he escapes, jumps in the water, and climbs up onto a seaplane and takes off. It's like, wow. And I thought that was, little kid Joe, I thought that was amazing. It left an impression on me. And later, when I was trying to think of a name for the firm I was looking to set up, I thought about what is it that they were trying to do and what I think fits in terms of visuals. And I thought, well, it's small by design. So it's a pre-seed seed, very small fund, and I want to keep it that way. Should be nimble, should be going places other people aren't, should be a sense of adventure, and it should be fun. And I just thought of that scene and Indy taking off in the seaplane, and I was like, Google, is that available? Like, it is. Oh, wow. So it's that's how the name came about.
Nice. Look at that. And another thing I always wanted to ask, like, you've obviously been very successful fund manager in your past professional life. What was that inflection point, or what was that thought or incident, or the conversation that you had that made you think that now is the time for you to start something of your own, a fund of your own, which arguably is more risky, kind of like starting a startup. You need people to support you. You need, and each and every decision you make is arguably much more risky and falls on your shoulder. And it's your name on the line at the end of the day. So what made you start something like that?
Yeah, it's a good question. I mean, to your point on risk, sometimes I'll get a question from a founder like, have you ever started the business, or you have experience as a founder, operator? I'm like, well, solo GP. So yes, I'm very much eating my own cooking here. Yeah, I guess to go back in time, over the arc of my career, I got into investing before I could drive. I think I was 12 when I really started getting into it. And for most of my career, I started my career in large caps in the US, which is a place where I think you can do well. But the investor obsessive in me, who's always looking to do better and refine the craft, which creates a lot of opportunities for investors who are growth focused and early. Whereas breakout growth companies in America don't really list until most of the juice has been squeezed. the early juice, but a lot of the juice in terms of total return potential from investors from private markets. And that's a combination of there is the capital for it, but also a lot of founders want to stay private rather than be public for as long as they can. So anyway, to go back to your question, I had a fair bit of success with small cap investing, and we'll get into it too specifically, I guess. But it went well, and I had a lot of fun with it. And our biggest wins were super high growth situations that were essentially just public venture, and they were more mature than where I'm focused now. But I really enjoyed it, and the potential returns were pretty attractive. So for personal reasons, namely my family and I had never planned, we were in Australia for 9 years. It was awesome. We had a great run, but we wanted to come back to America and then settle here again. And when we did, I felt like, how did I want to spend the next 25 years of my career? And seeing that I had the most fun and success being really early, I thought, well, why don't I take this to its logical extreme and go all the way with that? And while I'm at it, as far as setting up the firm, setting up something really small. The last firm that I was running, I co-founded Lake House Capital, which was part of the Motley Fool Australia, which was part of the Motley Fool big U.S. parent company. And I loved the team. It was great. It's all positive, good things to say. But by the time I left, we had 3,000 clients, $600 million in assets. And I just wanted to get back to as much as I can, just to the investing part, which is what I enjoy, and being hands-on with that, and just run something very small. So step back from that, came here, set up Seaplane in Austin late last year, and that's the story.
And I think you had mentioned it briefly. Ever since starting Seaplane, you have spoken to 400 plus odd founders. 400. That's kind of, and even if you consider like half an hour each, that's like months of your time, if I'm not wrong. And you've gone through, obviously spent a lot of time. You have done research in different segments, obviously. Amongst all these tasks or all these things that you do, what is the one that you found most fulfilling or most enjoyable?
Well, I'd say it's now so far beyond 400. But yeah, look, I love talking to entrepreneurs, hearing about what excites them, what they're building. It's inspiring to see that, and to be able to do that on a daily basis. Sometimes people are like, well, you work by yourself, don't you get lonely? And I'm like, I talk to fascinating, high energy people every day. I never feel that way. So that's a big part. I also love thinking about the craft and actually doing the work. I'm just someone who, I'm most in my element when I'm just in the zone thinking about problems and potential and what could be with the startup. So I just love doing that and disappearing in my head for hours. The other thing, let's see, it would be working with founders and doing what I can to try and support them. I'm a pragmatist in that I'm never going to know the business as well as the founders who lead them, right? But I do what I can, and I'm excited to try and help where I can. So anywhere I can do that, it puts some pep in my step, and those are things that kind of get me out of bed and motivate me.
Leading on to what then made you invest in XENA? Your Seaplane's first investment happens to be XENA, and we've spoken, I think, once, twice, or maybe thrice, a couple times over the phone before you made the decision. I'm pretty sure you have done much more work behind the scenes. You did your research. I'm pretty sure you must have spoken to a lot of people too. So I'm very curious to know. I don't think I've asked you either. What made you decide XENA as first decision? You have to justify to your LPs. Lot riding on this, arguably. So
no pressure, no pressure. Yeah, look, I mean, beyond, but in all seriousness, beyond, your background, having a lot of confidence in you were obviously core parts of it. Having relevant experience as a founder is pretty important. And I say that, one thing that's interesting about venture is, you could watch an infinite number of interviews with VCs, and there are a million different perspectives. It's like snowflakes on how to do venture the best way. I think there are many different ways to succeed as a venture investor, but I try to inform our thesis and process at Seaplane in an empirical way as best I can. And I also then try to play that to my strengths and what I'm good at. And the reason I say that is when you look at data, there's not really a lot of strong signaling around whether a first or necessarily second time founder is, or even third, is going to be more successful than other buckets of founders. There are different studies on that, and you'd be surprised. The signal was not as strong as you might imagine. But what is a strong signal is industry experience. So it's sometimes less about it's less about what startup number you're on and more about that experience. And yes, I can think of examples where people have succeeded because they were outsiders, and we could go down that rabbit hole. But on average, industry experience is correlated with better outcomes. So that's something I look for. But I also tend to be pretty product centric as an investor. And the reason for that is I view product as, it's the manifestation of your vision as far as your ability to execute, and then also your ability to connect with the market, try to identify the market's problem, solve that, but also to sell it. That's the traction side. And that combination of things to me is where I tend to lead as an investor as far as my interests. When I thought about XENA, ultimately it's a product that helps customers sell more, save money, and save time. And that's kind of the holy trinity, right, of what you're trying to solve for. And if you can grow sales, improve margins and make life easier for the people using and paying for the software, well, that covers the waterfront. I mean, short of like a back massage, it's hard to think of much more than what you want. So that to me was pretty compelling. Another, I can speak a little more thesis in a bit, but we are big on recurring revenue models at Seaplane, and the fact that there is a self-reinforcing dynamic here that as XENA gains scale and more intelligence, it improves the product. That was the recurring revenue dynamic certainly helps. But then the market, I think, is also really attractive. So I've been an investor in Amazon for more than a decade. So I followed that space really closely and have a pretty good handle on it. I don't know, a few like factoids that I think are relevant. I speak to the market, but you would know this, but a lot of people watching wouldn't know that 60% of items sold by Amazon are third-party sales. And the Amazon ad business was $40 billion last year, and that was up 23% year on year in Q4. If you go back and look, Google within Alphabet and the ad business within Meta, those were up 3% year on year in constant currency terms. So I think the Amazon ecosystem and ad business has a really long runway to go. Another aspect of that is that even though it's very large, there's a lot more competition on the Google and Facebook side of ad optimization than there is on the Amazon side. So kind of put all that together, and my impression is you chose your first market wisely. I think the business also has a lot of optionality, right? Where there's multi-platform potential, both in terms of the platforms you sell on, but it's not hard to picture there being other, ad platforms that at some point in the future that XENA can help cater to and serve for as well. And I guess one last point that stood out to me is, I love that you grow with your customers, and the more successful they are, the more successful XENA is. So there's really clean alignment. So a lot of different dynamics. But yeah, that's probably the thesis in a very large nutshell.
I'm truly honored, and like you said, I think I am feeling more pressure to justify your trust in me, and hopefully I will be able to pull that through. And you've spoken to, I think, 400 plus, probably 500 founders at this point, and I think that's more than enough sample size for you to get a general lay of the land for pre-seed, seed type startups that are working these days. Do you have any advice for them generally, or something that you wish you could tell them after you speak to a lot of these founders?
Yeah. Well, on that note, so I've looked at, in the last year, let's call it over 600. And when you're a founder and you hear VCs talk about how many rocks they turn over for every investment they make, and we've made a couple others subsequent to investing in XENA, but, I realize that's deflating if you're a founder. I get it. But I think one thing that I would try to understand as a founder is, VCs aren't meeting with founders just for the sake of meeting with them. We're not trying to tick boxes. There's no scorecard. We don't get bonus points for having meetings that don't go anywhere. We're looking to find outstanding founders with great ideas we can back and support, right? And be multi-year, decade-long partners for. So I would go into the mentality of, you're going to need to talk to a lot of investors, particularly in this environment. Seed funding was down 39% in Q2 year on year. So it's pretty tough. And, feedback I've had from founders, and what I would say is, a year ago, you would still have deals that were perhaps a little flimsy, not a lot of traction. Founder may not have a lot of relevant experience, and some of those would still get funded. And those kind of deals are just not getting funded today. And that can be frustrating and daunting to founders. I'm sympathetic to that. But what I would try and lean into is wherever you can, traction. And, traction to venture is what location is to real estate. So location, traction. So what I mean by that, I talked to a founder a couple months ago who had a social startup, social media. Product looked great, but at the end of the day, there just aren't a lot of people engaging with the product. And he was most of my conversation with him was around the fundraising environment and how tough it is, and he couldn't raise. And again, I'm sympathetic to that. Like, I'd love everybody who's, got an awesome dream to get funding. But, at the end of the day, the biggest solution for that isn't getting in front of the right investor. It's more traction. It's more people using your product, engaging your product. So that's kind of where I would, it's tempting to focus, to get wrapped up in the fundraising, which is important for sure. But the better your traction, the more delighted your customers are, the easier it is to get investors coming towards you. I would, be a pragmatist as well around, you might have a friend or a founder you've met before who told you they raised at X 18 months ago, and at the time they were doing Y in, revenue or lack thereof. Today, both those numbers are going to be different. So valuations at pre-seed and seed actually haven't moved. It depends on what data you look at. But okay, I'll frame it like this. I hope you're looking for a nerdy conversation here. Let's really nerd out here. But a way to think of it is roughly the number of deals that are happening in pre-seed seed is half of what it was a year ago. So when you hear metrics, it's really more like a third, but let's call it half. When you hear metrics like, oh, well, the median valuation hasn't changed year on year, but that's misleading, because the bottom third and bottom half of deals that happened a year ago are just not happening today. So what you're seeing is today, it's like the top half, top 2/3, you're taking the median of that and comparing it to the median of a sample that included a ton of deals that just would not get off the ground today. And I suspect that if you kind of common size those, that valuations have come off some. But to get back to it, that all sounds harsh and negative, but you could think of it as the glass is still 61% full. Like, people are still deploying. There are VCs like me and plenty others who are, actively looking and want to deploy money in great startups. So hang in there, focus on your traction, focus on your customers, do what you can to delight them, sell more of them, drive engagement, keep your burn manageable while you're at it, and try and talk to a lot of investors who fit your thesis, or whose thesis fit what you're doing. When you talk to them, put your best foot forward, be direct. One thing I'd say as runways have gotten shorter in the last year, I've had this situation a couple of times where I'll have, like, sometimes an hour-long conversation with a founder, And then towards the end, I kind of go through some just kind of financial health check metrics just to understand, where the state of the business as far as financials, right? Capital structure. And the business might have just kind of, we'll call it very, very, very short runway left. Try and be on the front foot here again with what your challenges are. Because one thing as a founder, I know everybody's got challenges. There's no perfect startup. They've all got some hair on it somewhere. And, that's okay. And just own it and be open with people but just show them what you're excited about and what you've built and how far you've gotten, and hopefully that'll take you far.
Speaking of, you're still writing checks. I believe there are a couple deals you're involved in, and I believe you're still actively writing. So if any startup founder, I'm sure there are many who would think that, your thesis matches them, what is the best way for them to reach out, and what are the few things that maybe they could do that might be of real interest for you?
Yeah, sure. That would be great. Yes, we are actively deploying. So we just held the first close in our first fund, for context. So probably got another 2-3 years on fund one to deploy. So a lot of work ahead. Look, I think to go back to maybe just to spell out the thesis more, pre-seed, seed, I mentioned we focus a lot on recurring revenue models. We also focus a lot on network-driven models. So we only invest in startups that have models geared around that. So as a result, we don't really do anything like CPG, life sciences. That's not like robotics, hardware. That's not to say those can't be great places. It's just we don't have the expertise to invest in those in Seaplane. So another would be live products with commercial traction. So beyond idea stage, and where we kind of slide in is there's live product. The founder's proven that there's a customer base out there who values it, who's getting a lot from it. They just need that initial extra push. We're happy to be a first institutional check at Seaplane. We're also happy to be part of a larger round with a strong lead. We're happy to be somewhere in between. We don't have a set ownership target. We're more focused on backing outstanding startups and founders, and just wherever the right time is within their journey is what we're open to. So all that said, if that's you, awesome. And we'd love to talk. So if you go to seaplaneventures.com, just only contact us. There's a form you can fill out. Just shoot it through. I read all those. They go directly to me. And if it's on thesis, we'll definitely give it a look and, get back to you and see where things go.
Very good. And finally, I would like to imagine that Seaplane is a startup in itself. It's your venture. What's next? What's your vision? What do you want to do in the long term?
Yeah, great question. So I think a lot of people so my ultimate goal would be 25, 30 years from now, I'm kind of stepping back and people are like, wow, Seaplane really crushed it. And I'm fine if other people don't know who that is. I would like to be known for performance rather than size. So, the vision is not, I think sometimes people start with like pre-seed seed funds and then they try to move up market because you can do bigger funds. That's not my goal or vision. I want to consistently stay this size, keep very small funds, and just focus on, performance and, supporting founders and having a lot of fun along the way. And if I'm delivering on performance, supporting founders, and again, enjoying it, then that's the big dream for me. So as far as what's next, I'd say, just executing on what I'm here for, and just keep at it. And I got a lot of work to do ahead. So, yeah.
And I'm also very curious to know, have you met a lot of solo GPs? And if so, what is their typical career path? Or if somebody wants...
Oh, sure. I have. Mm-hmm. We're kind of a unique club. The career path for solo GPs is interesting because a lot of them they either worked at a venture shop before, and they've spun off, but they may if you've worked at a venture shop, you may actually be able to get seed funding from some of the folks you work with or prior investors. And a lot of those folks don't end up going the solo route. They end up getting partners. A lot of solos are people who have kind of eclectic backgrounds. So some of them were former operators who then became angels and had some fun and success with that and decided to start small funds. So that's probably the most common prototype I see for solo GPs. But yeah, there are plenty out there. I will say there are a few. Well, in 2023, the number of funds that will raise capital, the way things are pacing, will be the lowest number in a decade. But the amount of capital raised will be the lowest since 2018. So when you read through the lines, what that means is not only fewer funds are getting off the ground, but the money is tilting more towards larger funds. So there are fewer solo GPs coming to market. There probably were too many hitting the market 2-3 years ago. There's some people who are solo GPs as like a side gig, side hustle to be a founder. I personally have too much respect for the difficulty of investing well to do anything else in addition to that. If they can do it, good on them in that respect. But I do enjoy working and talking to other solo GPs, collaborating with them. And I think that in the long run, there's going to continue to be more of them, as barriers to entry fall in the space. And I think that's healthy for the ecosystem. Just opens more doors for more founders to get backed and from investors who might have skill sets or a thesis that's very specific and on brand to them, rather than if you go back in time, the classic funding model will be a little more generalist. You're going to find more specialization for pre-seed and seed, which I think is great for founders.
Yeah. And Joe, let me not take more of your time. I know you have hundreds, if not thousands, more founders yet to talk to. So I'm very glad that you spent some time with me, and I'm very, very honored to know you. And I do feel really special that XENA is one of the first investments that your solo GP venture made, and I'm very thankful to you for that.
Very kind of you. I appreciate it. Thanks for having me, and we're very happy to be partnered with you at XENA. So exciting times.
All right. Thank you. Thanks so much, Joe.